This has been another week of tough economic news. The Federal Reserve Bank raised interest rates 0.75 of 1 percentage point as it tries to get inflation under control. That's the highest increase in almost 3 decades. The major stock indexes wrapped up their worst week since 2020 and the pandemic crash. For the week, the Dow lost almost 5%, and the S&P 500 finished more than 5.5% lower. The Nasdaq was off nearly 5% as well. The price of oil dropped slightly, but still remains high. Michael George joins us to sort all of that out. Good morning, Michael.
Michelle, good morning. We're seeing multiple signs the economy is slowing, and a new report of leading economic indicators suggests weaker growth in the near future. Now, experts say we're not in a recession yet, but we could be headed there. In an economy driven by consumers, economists are keeping a close eye on what they're up to. Take credit cards. In May, use was up 10% compared to last year. But throughout 2021, monthly credit card use reportedly rose 20% on average, signaling slower spending.
Many consumers are buying fewer goods.
Dana Peterson is chief economist at the Conference Board, which analyzes trends in manufacturing, housing, the stock market, even the movies, and issued the leading economic indicators report Friday.
What's the big takeaway that they can get from these indicators?
The big takeaway is that, look, there's trouble ahead. That's something that we shouldn't ignore. But right now, things are more or less okay. Most people are working. The unemployment rate, which is something lots of people do pay attention to, is very low. It's 3.6%. And not only are most people in the United States working, many people are seeing wages rise.
A steady paycheck is helping consumers to keep consuming, even as they pay high inflation-driven prices.
There are a lot of people who believe we may already be in a recession. Can we say whether or not we're at that stage yet?
Well, the leading economic indicators is telling us, no, we're not in a recession right now. But the reason why some people are saying that is because it may feel like one. Inflation is super high, and a lot of that's being caused by factors that are arguably outside of the United States.
Russia's war in the Ukraine is a key factor worldwide, and one President Biden called out yesterday when he hosted the Major Economics Forum from the White House.
And with Russia's war driving up inflation worldwide, threatening vulnerable countries with severe food shortages, we have to work together to mitigate the immediate fallout of this crisis. In the United States, I'm using every lever available to me to bring down prices for the American people.
And the president also said the U.S. is coordinating the largest release of global oil reserves in history. What he and Congress have yet to put on the table is lowering the federal 18 cents per gallon gas tax, as some have suggested. Dana?
All right, Michael, people will take any relief they can get. Thank you.